Alright, let's bust one of the biggest myths in economics. Is the Federal Reserve actually private? And if so, why does it run the show for the US economy? Stick with me. Fast facts, science, law, rapid fire. Let's go. First, what is the Federal Reserve? It's the central bank of the United States, created by Congress in 1913, but not simply government. The Fed is a hybrid, public mandate, mixed structure. Public side, the Board of Governors. 7 members appointed by the President, confirmed by the Senate, based in Washington, reporting to Congress. Private side, 12 regional Federal Reserve banks spread across the country. They operate like separate corporate-style entities in their districts. Member commercial banks literally hold shares in their reserve bank, but those shares aren't tradable or controlling like corporate equity. So yes, private by local ownership, but limited by law. Legally, Congress created the Fed with the Federal Reserve Act of 1913. Congress sets the Fed's mandate: price stability and maximum employment. The board is a federal agency, appointed, paid, and reporting to Congress. Regional banks carry private aspects, operations, member services, dividends. It's a legal hybrid. Public mandate, private elements. Can the president fire the Fed chair? Short answer, no, not at will. Board members serve 14-year staggered terms, designed to prevent stacking. Terms are staggered so no single president can control the board quickly. The president appoints the chair and governors with Senate confirmation. But removal requires cause, not a political whim. Independence is by design, to keep short-term politics out of money. If politicians controlled rates, election cycles could drive inflation higher. History shows politicized central banks produce higher inflation. Independence helps maintain price stability and public trust over cycles. That's why the unusual structure exists. What does science say? Many studies show independent central banks weather shocks better. Countries with independent central banks tend to have lower long-term inflation. Latest cross-country work links independence to faster post-crisis recovery. Lower inflation, more credibility, improved long-run outcomes. But trade-offs remain. Democratic accountability versus technical credibility. The balance is messy: private structure, public purpose, constant scrutiny. The Fed is always under scrutiny: Congress, markets, academics, press. Should it be nationalized? Some argue yes, more democratic control. Others argue independence is the core reason for stable currency policy. Both sides make valid points. Fast facts. Fact 1. The Fed does not receive taxpayer appropriations. It funds itself. Fact 2. After expenses and dividends, the Fed remits net profits to the Treasury. Example. In 2020, the Fed remitted roughly $86.9 billion to the Treasury. Fact 3. Congress can amend the Fed's mandate and has oversight, but not micromanagement. Why should you care? The Fed's moves shift global markets in seconds. Interest rate changes ripple through FX, bonds, and equities worldwide. They affect mortgages, loans, jobs, and the price of groceries. So Fed policy is economic policy with immediate, real-world effects. Real power, real consequences. Hypothesis. The Fed's hybrid form trades direct democracy for technical credibility. Critique. Private features create opacity and potential conflicts of interest. Response. Transparency rules, audits, and reports aim to reduce that risk. Recent research explores governance tweaks to improve accountability without losing credibility, so there are practical reforms to discuss. Proposals. 1. Stronger disclosure of regional bank operations and voting records. 2. Consider moderate term limits to boost democratic input without politicizing policy. 3. Clearer for-cause removal rules and independent ethics oversight. 4. Citizen advisory panels for transparency and legitimacy. Trade-offs. Reforms risk politicizing nimble technical decisions. Too much political input could undercut credibility and raise inflation expectations. Historical spikes often followed overt political pressure on monetary policy, so careful design matters. Accountability without short-term political meddling. Balance is the objective. Quick recap: the Fed is hybrid, public mandate, mixed private structure. The president appoints but cannot fire governors at will. Removal for cause only. Independence reduces political cycles but creates governance trade-offs. Reforms are possible. Design is key. Latest research emphasizes institutional design metrics: transparency, accountability, tenure rules. Cross-country panels correlate independence with lower inflation and faster recoveries. Micro-studies show regional banks' voting patterns matter. More disclosure helps researchers. Policy experiments, limited pilots for governance changes, are recommended by scholars. Science is converging on pragmatic, evidence-based fixes. Sound complicated? It is. but now you know the core facts. 1. The Fed is legally hybrid. 2. Independence is meant to protect long-run stability. 3. Real effects. Rates change lives instantly. Use that knowledge politically and practically. Myth. The Fed is secretly owned and controlled by banks. Fact. Member banks hold non-tradable shares and limited rights. Myth. President can fire chair anytime. Fact. Removal requires cause. Truth. It's unusual but lawful. Built to balance stability and oversight. If you want change, push for policy design, not conspiracy. Now the sponsor note, provided by www.laprove.com, source of nopal, prebiotic nutrition from traditional Mexican ingredients, pinole and chia, energy and fiber, agave inulin prebiotics for gut health, delicious in smoothies. Write us at info@laprove.com for discounts. Natural prebiotics, nopal, pinole, agave, traditional EU quality standards, created partly by AI and humans. Be aware this is not medical advice. OnePlus, AI can scrape latest public info quickly. Summary, hybrid legal form public mandate, protections from politics but room for reform. Subscribe for more fast facts and policy deep dives. Visit laprove.com and contact info@laprove.com, provided by Laprove, provided by www.laprove.com, source of nopal, pinole and agave prebiotics. Write us to info@laprove.com for discounts. Created partly by AI and humans. Despite disadvantages, there is one plus. AI can scrape latest info from global internet. Be aware this is not medical advice. Thank you. End of video.